Good afternoon, everybody. So it's 12 p.m. in Eastern Ontario. I'm very excited to welcome on Market Mayhem my guest, Jason Duncan from RentPerks.com. And he's got a really exciting product and service. I guess you have to describe it. I was having trouble describing it, so I thought I'd have you on my podcast to explain it. And for all real estate investors, this is something like revolutionary. I think you're going to enjoy this interview. So thank you and welcome, Jason.
I appreciate the introduction, Francois. Thank you very much, and happy to see everybody here today. There is a lot to unpack in our model, so I appreciate that a lot of times there is some mismessaging on what exactly it is that we do. To sum it up in a couple of sentences, the easiest way to think of what we are is what everyone's talking about these days is prop tech. What's unique about us is that we're not simply a service model of software. We're actually a bookends turnkey service that actually has infield staff representatives as well. The best way to run an analogy is, if you understand the difference between Shopify, which is a software model for retailers, and Amazon that runs an entire back office logistics operation for the retailers, we're more like Amazon. We actually have a very unique scheduling system around staffing in field, etc. And that's really empowered by our operations center, which provides us incredible excellence in field. The way that we staff is a little bit more like Uber or Skip the Dishes or all these different things, where we have this growing pool of people that are in field, and they're connected through our technology that, based on the requirements in field, we can have them show up live to the doors and do everything that we need, from opening the door to posting notices to dealing with any requirements that are actually at the assets themselves. And that's the real unique differentiator between us and the over 100 software packages available for property management today.
Yeah, because there's lots out there. I mean, lots of options, but you always wonder, what should I get? Should I invest in this software? So yours is really turnkey. It's software and the staff. So
in the last year, as I've been reaching out to communities like yours and really investigating what people are dealing with, the one thing that I would say is consistent across all regions and landscapes of both single family and multifamily assets is there is a growing list of software platforms being used on a daily basis. But there isn't something that is an entire ecosystem of service together. And by design, we are really attacking all of the aspects that are required around the operations of managing rental properties. And essentially what we do is, as we get into new markets and we achieve different scales, we're constantly tracking what's going on in our services and operations and looking for lines of improvement to our services as well. Case in point, the last 6 months, one of the features that we've developed, which is not just a game changer in addition to all the other things we're doing, but it is really significantly different. And we talked about this on our last call, is knowing what's happening around vacancy. And what we found is that we were losing placement opportunities because we were relying on humans to jump in on the communication with prospective tenants. And those delays, as you can appreciate, tenants want to find a place and they want to find it now and they want to move. They don't want to go through over 100 listings and sort through everything and figure out what's going on. So we literally developed a tool that allows us on all of our advertising platforms to respond instantly to those prospective tenants with an availability that is integral to our scheduling system of our staff, and say, show up at Wednesday at 6 p.m. at this address. And we kind of pool all the requests in on those times, and it's all automated through our system. Communications are going out. Our staff are getting communications to confirm who's showing up at the door Wednesday at 6. And so what's really interesting about that is, as soon as they send a message, we're top of mind. They know what listing they were looking at because we've communicated to them directly. We now have captured that audience. It allows us to get greater volumes of interest on the properties, which also allows us to sort through which tenants we want to place on the properties based on all of our employment and credit verifications, and as I mentioned, some of our AI modeling that looks for social behavior that we're trying to flag potential risks on tenant placement. So that whole thing essentially operates on its own. The only human interaction is after the confirmation, our staff show up to the door Wednesday at 6, and they're there to answer questions about our service platform, our rental process, all the bells and whistles of being a tenant in our platform. And what we have is an engaged audience that's already there and receptive to what we're offering. What's really important for an investor is the data that's going on there. We're investors. We understand what the requirements are around knowing all the traction of your cash flows and trying to monetize on every part of the asset possible. So, case in point, this new model allows us to tell you how many requests came from each of the third-party advertising platforms we use. And as you'd appreciate, every region has a completely different favorite place for tenants to go to.
Yes.
And so we're advertising across the network of all of these platforms, cross-promoting, etc. The ads are all consistently the same because our operations team runs all of the branding and advertising so that everything is consistent. And then that's communicating through to those prospective tenants. Well, now it tells you we got 47 requests from, in Alberta, we have Rent Faster as the incumbent. In Ontario, it used to be View It. That's sort of changing with Zumper and all the other ones coming around.
Yeah.
We tell you how many came from all of them. Then we tell you how many showed up on the confirmed open house. And then we tell you how many offers we received. And then finally, the offer we selected and turned it into a lease, and it holds all your details. And so, just on the front side of your property manager out there in the marketplace, the most important thing to you as an investor is what's going on with my cash flow when you've got a vacancy.
Yeah.
So we've just answered it, and it's real time, and it's going to be going live into a model that's going to tell you what we're actually doing for you when you hire us. And so that's really unique. Some of the reporting in that is also getting into some advances. My background is commercial real estate. I was a decade commercial broker, and my real interest in anything related to this is pro formas and evaluations on acquisitions and dispositions in market. Well, you are playing a lot of guesswork right now on your folios because you've got the best information that you have to work with, and you're kind of putting a lot of risk in what's going on. What's important to me and what's being developed in our new reporting tool, which includes all of the on-market advertising stuff I just discussed, is tracking the asset performance. And we hold all the data around every one of the units that are being rented. We hold the data on all the common area costs that are going against that asset. Well, guess what? You probably have an audience of people that have multiple assets, and they're in different regions, and you want to know how those are actually working against one another.
Yeah, because sometimes it looks good on paper, but you don't have all the details, or you have partners. I often invest with partners, and they want to know how is it doing. Well, okay, this would be amazing. You just pull a report.
All you have is the finite math in the account, and all the guessing is based on speculation. Well, now what's being incorporated with that new tool that I started out with, it allows us to see the attraction of the asset and our services helping the asset in market on attracting better rents and monetizing that cash flow in a more consistent manner. There's data all inside there. So what we're actually creating is a tool that gives you benchmarking data across your portfolio.
Wow. And you mentioned on a call we had a while ago something about tenants helping them pay sooner and more, like not kind of educating or helping, or I'm not sure.
Yeah, so our company is RentPerks, and the perks part is really a data thing more than it is a rewards thing. What we do is we focus on the control of behavior by a rewards incentive model. But what's really important in what's happening underneath that is the data. And so you're exactly right. One of the things that we found really interesting is we acquire existing rent rolls. We're entering new territories. You give us your asset in, say, Winnipeg or wherever they are. We take over that asset instantly. We're changing the communication with those tenants. We're a
Yeah.
technology company, so we're a high-level communication company. And what we've seen on existing assets that we've taken over that have consistent delinquencies that range anywhere from 7 to even up to 30 days, people pay a month
Oh,
late
yeah.
on rent, right? What we've found is that the communication improvements and the reinforcement by rewarding these tenants for the behaviors that we're seeking, which are consistent payment behavior and not remodeling the asset unnecessarily.
Yeah.
We're creating an incentive-based model around the behavior that's desirable to the assets. On the front side of it, it really has the perception for the tenants that we're actually valuing them as a tenant. Their cash flow and their efforts on paying consistently is really important to us.
And it is really
It
is.
is. It is. We're presenting that. So they see that perception. But as you appreciate, you see right away what that's doing is it's actually controlling and monetizing the assets cash flow.
Yes. And how, like, the rewards part, like, I know it's not like you're not getting free pizza, but how does it look like if I'm a tenant? That's the one
So
part I didn't explore very much.
Absolutely. So we've got a group of companies. RentPerks is our prop tech company, and it manages the property management portfolios. REM Loyalty is a rewards company that is a very unique model. People don't like to talk about it as a blockchain cryptocurrency, but why we went with that is actually about the open market availability for the exchange of that modeling. We're less concerned about the technology because it's irrelevant. What is actually happening is that there's an ecosystem that can be used any day with a free exchange. It's an open market opportunity. We have over 500 of the largest brands as partnerships through an exchange network. I mean, every retail brand that you can think of, I can guarantee we almost have a rewards card that they can exchange their currency for
Wow.
directly and then use it online for shopping and everything else.
That's amazing.
It really is, right? And then we can actually exchange those through 12 currencies.
Okay.
And so one of the things that's in your demographic that's regionally dependent is you've got a lot of people that are just coming to the country from other places.
Yeah.
And, you know, what's important to them is they're in a land of opportunity and they're trying to get new employment and regain their lifestyle. They probably have family back home. And what's important to them is sending money home. You
Mhm.
know, they're using MoneyGram and all these other things. Well, now they can actually send all of their money that they're earning for being a good tenant directly via a e-gift card, and those people can use it in their currency online through all of these shopping networks,
Wow.
etc. And so it's a loyalty company, the way loyalties are supposed to be. It doesn't have the challenges like an Air Miles or an Aeroplan where you go to exchange and you need minimum amounts to be able to use them for the programs. The majority of them never have any. In the loyalty industry, there's $15 billion sitting in an account that cannot be exchanged because the
Yeah.
global IFRS requirements are that those reward companies actually have to have a dollar equivalent to their entire rewards business
Yeah.
in an account, and it can't be exchanged. There's $15 billion out there not being used. It's amazing. And so we've got this model that essentially is, you know, if you have enough in your wallet for any of these things, you can just send it out. You can exchange it online. It's freely operable. So I parked that because that's really unique and it's a whole other world. But
Yeah.
why that's important, again, going back to the reward of the behavior, this is where we're really targeting our data set and understanding how to enter, how to start to evolve and control and then monetize that behavior. The importance of our ownership around that reward company is actually more direct to the cash flow as well. One
Yes.
of the things that we're going to be launching next year is about your cash flow directly. We have a very unique relationship with the banking infrastructure. So in Canada, we're partnered with TD Canada Trust. We've got regulated trust accounts for all of our rent collections. It's a merchant processing system. Higher net worth assets and demographic of tenants, they have an option to pay by credit card. We don't really talk about that because it's a small percent of our pool, but that's there. What's important about the rewards company is that it's going to be introducing a relationship that we have with MasterCard, and we're going to be issuing a RentPerks REM loyalty rewards debit MasterCard.
Oh, nice. Okay.
So to park that for a second, it's really important to understand what's happening there. It is a debit card. It's not a credit card.
Yeah.
So the cash in the account is finite. You're not collecting rent on debt, which isn't putting your asset at risk, right?
Yes.
It has the added rewards in addition to what they're earning in RentPerks when we do inspections and their payment behaviors. It tops that up. So again, creating more interest on the behavior and taking care of the asset, because we're treating them better than anyone has the capacity to do in the industry right now.
Yeah.
Why are they going to beat the place up and look for another property? Well, those are the ones we don't want, and that's fine. But what we're doing is pushing interest to the assets we manage, and what we're actually creating is a brand for renting.
Yes.
So there's demand in the marketplace for attracting better tenants, better rents. We increase top line revenues by at least 2% across all our portfolios. We do that with a really efficient operating cost model that doesn't burden your bottom line. It actually improves your bottom line by just the implementation of our service. And then we actually get better monetization of the assets because we'll have greater occupancy and more consistency around the occupancy. So again, looking at all the cash flow side, and then what you're doing from a reporting in your portfolio as you're going in your acquisitions and dispositions. I mean, you got opportunities to go and refinance after we've taken over a portfolio and we go in and change everything and you go refinance. Now you've got greater leverage for doing other opportunities as well.
Yeah, that's talking to me and to all the other real estate investors out there for sure. Cool. So yeah, and that's interesting. You were also mentioning when we spoke a while ago about smaller markets or areas that are a bit in like smaller towns or tertiary markets. Because that's how you find property management. So you find great cash flowing properties, but you can't get property management out there, or it's very little.
It's virtually impossible, right? And so one of the things to really understand about the way that we operate with that Amazon Uber hiring like modeling, what that allows us to do is have a greater capacity of employee engagement in field. Yes. Our tech specifically isolates the regulatory requirements. I mean, I'm a licensed real estate broker, you know, and most of our regions are licensed territories. Regions like Ontario and some of the states, they don't have licensing, but our model's consistent across the board. So what that means is we're entering those markets and we're operating at the caliber of our annual auditing going on in the other regions, because we have a consistent service platform that is not regionally bound. We cross boundaries, right? And so that's important, is that every state or province has the exact same service level. The tertiary markets, it's really interesting because in those markets, we actually find a high volume of interest in part-time engagement in our staffing model in field. And you have to understand that what we've done is very specifically isolated regulatory requirements in our servicing and removed the components predominantly and pushed it into the tech, so that we're line of sight over every asset we manage with a very strict and stringent process on what we're doing in field. But the infield part, they're glorified door openers is really the best way to think about them, right? I mean, you think about people that are dropping food off at your door, or taking you on a Lyft or Uber, and getting you around. They've got a very unique staffing model. We do as well. And when we hire those staff, we're also deploying all of our background checks on everybody we hire, not any different than we do on our tenant placement. And so we have this massive pool of part-time interest wherever we go. Case in point, we expanded to Edmonton at the start of January, and within 47 hours, I got 96 applicants.
Wow, that's quick.
We actually managed to hire somebody that is tenured in the space, that was in a different market, but had interest, and it's worked out really well. A highly engaged individual. So that's a high density city center. But then you go to places like Fort St. John. Who's up there? Mostly oil and gas guys. They're there on contract. They're in and out on periods. Staff in the market is hard to find, except because of our model. What we're actually finding is there's a lot of wives up there that want to do something. They want to be engaged. They like the idea of what we're doing, and we can target them. And we've got people that are articulate. They show up. They've got a good demeanor. They can talk about what we're doing, and they can actually somewhat upsell the service and the modeling. And all they have to do is open the door to let somebody in.
Yes. No.
So we're able to get into those markets really easily.
That's great. Yeah. And I love the like the servicing part you mentioned. So for a tenant as well, there's huge benefits. Just a toilet overflowing or a leak of some sort, they can upload right into your app or your website. And
so this is one of the advantages, because we are a tech company. We own all the IP. What's important about the back end that we've discussed is the integration on our front end technology, and this is through iOS and Android mobile apps. So our infield representatives are connected into our ecosystem real time. Our investors, predominantly single family rentals, because their folios are typically 5 doors or less. The app allows them to have the insights. A portfolio with multifamily is too complicated, which is why we're migrating this new online tool that will have all the stuff that we were discussing at the outset integrated, because the requirements come up in what we're doing. We were built for single family. My commercial background's taken us into the multifamily, and we're scaling rapidly there as well. The apps for the tenants have a concierge platform that's integrated. It allows them to take a photo of the problem, enter a description. They can actually schedule availability for the maintenance personnel to access the unit directly in the app. Wow. When that comes through to our concierge team that are running our internal operations, they have real-time line of sight over that unit. They hold all the lease detail. They own the asset entity ownership, all the contacts. They have all the trades that are there on consistent scheduled maintenance and things. It's all real-time and live, so it allows them to deploy maintenance personnel to the field almost instantly. The greatest impact is to de-risk the capital cost in those environments. Yes. And our efficiency and our response times are really what's important there. The perception, again, going to the tenant, we're taking care of them. We're instantly responding to everything. That makes them feel like they're treated with value and respect. And it changes their attitude towards the collection of their rents and the treatment of the property as well. So everything that we do works two ways. It's a double-edged sword. The perception in market is that we service, we're accountable, we're trustworthy, we have a diligent process, we have all these rewards, we have these payment options, everything to attract and everything to keep the good tenants in our platform, which all simultaneously directly decrease the capital expenditures on your assets.
Yes, that's the not most important part, but quite up there on the list.
It's pretty important, and what I would guarantee that is overlooked more often than not, because there is an expectation of what is going to take place in that environment right now in any market today. You mentioned the difficulty in finding staff in these tertiary markets and things. You have a response rate. The RTA is typically 72 hours in most instances.
Oh yeah, that's great.
Well, an entire building can collapse in 72 hours.
Yeah.
Right? And so what we have is a digitally engaged system that we know. So case in point, somebody calls, there's a flood in a single unit. Well, we hold all the other unit contact.
Yeah.
We can instantly communicate to them, hey, are you noticing anything in the ceiling? What's going on? Tell us. We got that feedback loop that is almost instant, and we can engage and we can direct the trades while they're on their way. Look, it's affecting other units. Shut the main line off.
Yeah.
Like we got to fix something.
Major.
And the first thing to do is not go to the unit and investigate. Go turn it off.
Yeah.
And then go figure it out.
Man,
right?
Wow, that's great.
So massive things like that especially when you're getting into having multiple assets, when you have that, you will start to see a noticeable improvement to your finances.
Yes, that's the part that's interesting. I mean, because you buy all these properties and then they don't turn a profit because you keep losing money because of stupid leaks and
that's a really good point of reference that I'd like to kind of take apart for a second. And why is this is probably the most consistent thing that we walk into. We are constantly engaging with taking over assets that have been poorly managed.
Yeah.
And I'm not going to directly put fault at those managers. It's because of their traditional model and the workload on their staff and the way things operate in the space.
Yeah.
It's their operating model that's the problem, not the individuals necessarily. Yeah. Sometimes it is, but also you have to factor in that just the way they do things is 100 years old. They haven't evolved.
It's not efficient, and the demands and the customer service level people are expecting are just not.
Exactly. It is non-existent. And so when you look at factors like that, and then we get in and we step in and we start doing all of these things, you can see within 6 months or less, we drastically change your cash flow because we're on top of collecting the payments a lot faster.
Yeah.
We're in field, we're dealing with the matters in a very quick fashion, that it starts to change the perception of the company that's taking care of the asset. And it just changes the entire environment and the ecosystem of those rents. But it's hard. I think the CapEx thing is a heavily missed opportunity. My commercial background, I'm working with some investment groups. Like we've just launched into the state of Colorado, and I'm working with an investment group that has a CapEx program on multifamily, and essentially they're going out targeting C and D class assets and doing a project management repurpose of the asset. So massive capital expenses, and I'm working with them as a technology management partner because I've got a unique background. And one of the things that we're doing is, taking over the asset. We start first by changing the physical appearance of the front of the entrance and everything else. So, nice new sign, maybe fix up some of the landscaping, start with the lobby, start with the common hall, start trying to get the immediate units closest to that lobby and repurpose those and work unit by unit. You know what happens in that process? Tenants in the property see that you're improving the asset. So maybe they can afford that extra rent, and they're going to end up taking those units. And you're working through the entire process and increasing the top line revenue with your existing tenant base.
Yes.
And there's a lot of financing opportunities depending on what region your assets are in that you can play into on doing those CapEx programs as well.
Yeah, and that's something, I guess you guys can kind of help us do in a way with having this knowledge and this data that you can show, we can present to a lender or a government program of some kind. Or
yeah, we can. It would be in addition to what we do as a management service. But we have stepped in those instances, and we've really worked with them. And what we've consistently had as feedback is we're more than reasonable. And the reason for that is part of what we're doing simultaneously in that process is engaging with local vendors that we can test out on all their work and everything else as we go to using them for service calls and things to the asset simultaneously. So it kind of works two ways for us. But it directly impacts the entire cash flow on the asset. And then, you're trying to lift that ROI and go and then put it out to market and try and get some return as an exit. Well, now you've got a massive delta on where you ever would have had an opportunity to before.
Yeah.
Right. And just so you know, for the audience, our multifamily management has two service models that are a factor of volume. If you've got less than 100 units in your portfolio, we charge 4.95% of the monthly rent that we collect. And folios over 100 doors, we can get as low as 3.95%. The only other fees that we have are when we're doing maintenance, it's a flat $9.95, $10 every time we do a work order, which allows us to get out there fast. So the $10 you pay is probably going to be absorbed instantly by our speed to market. And then the only other fees that we charge are on new tenant placements, not on renewals, but when we're actively in the market to find and place new tenants, we charge 14 days worth of the rent, which helps us to reimburse all of our advertising expenses. We're in a really efficient model. Part of the reason we're able to offer those fees and things is because our technology is really reducing our operational costs significantly in the field and internally, that we're able to provide all the cash management systems and the rewards all as an integral turnkey service at those fees.
Wow. No, that sounds amazing. Thank you so much for all this information. And if people want to find out more, what's your website?
So we are redeveloping our website with all the new advances. We're focused on the tech improvements, and there are some things that I've discussed today that are not included on the website, but rentperks.com has everything. You can go in as a renter and see the way that we advertise properties and how they apply. Everything's digitally tied together. To park one thing there, as an advertising thing that we do with assets, we are actually getting into creating independent real estate in our website that would have your asset with real-time availabilities on the asset, and prospective tenants can go in and just sign a lease at the push of a button, and that will be real-time. So every time a vacancy comes up, it turns over the unit and comes live on the website as an independent resource that gets pushed out to our advertising. When you go into the landlord side, there's only 2 tabs on our website. You'll see all the information explaining our services and our fees and things like that. But as I said, there are some things that will be incorporated. What we're doing right now, we've internalized that advertising repository. We're working on our new AR module, which allows us to manage utility splits, fees to tenants and things, which is complicated and maybe for another call. But that's all going into reporting. The whole tool set is being pushed into the online reporting module, and that's our primary focus right now. Once we get that working, then we'll go back to the website and do all sorts of updates on all of our new services, etc. But we can get into a new market serving 30 units or more. And so to your audience that are maybe in some of the tertiary markets we're not operating today, we can literally get up and running on a very limited portfolio because of our model, save for our timelines on regulatory requirements. We may need either use reciprocity for my license, which I'm doing in Saskatchewan right now. Those are typically a 6 to 8 week lead time. If it's an unregulated region, I can be live in 3 weeks.
Wow, that's amazing. So yeah, that's really good. I mean, because sometimes you wonder, I'm interested in different markets, but I'm not sure who to reach out to. So this would be amazing to have this relationship, and you're confident you can invest pretty much anywhere in Canada or USA. So that's excellent.
Yeah, well, Francois, listen, I appreciate you providing so much time to your audience today. I hope this was informative and hopefully some excitement come out of it as well.
Yes.
I'm always happy to engage with people. If people want to reach out to you and contact me directly, I'm happy to schedule some time to explain things further. And if there's a growing interest to maybe go into a little bit more of a detailed conversation around some of the aspects at a future date, I'd be more than happy to schedule with you as well. And really appreciate you putting me in front of everyone today.
No, it's amazing, and it's quite a complete offer. So yeah, in only 35 minutes, it's hard to explain it all, but it does
Yeah.
give us a good overview and yeah, a taste of what's available. And then yes, you can reach out to Jason or reach out to me, and I'll put you in contact with Jason, and just make sure you find out more. And yeah, we'll have to stay in touch. Definitely, I'm interested. As I mentioned, I'm growing in different provinces and states, so I have to meet that 30 door requirement. So some places I'm not there yet, but I'll have to see if maybe another investor has a few doors, and then we're able to meet
Yeah.
that
Well, one of the things we didn't get a chance to speak to that I can maybe just leave as a bit of a seed for conversation is we're a model that's aggregating our portfolios and doing that through acquisition. And we've got 3 different capital firms that are raising funds for us currently, going to market for March. One of the things that we'll be doing is buying rent rolls from the marketplace, and depending on the portfolios and the locations, we may be able to take the property management line item from your NOI and convert it into a capital interest that will actually buy that book of business directly from your audience, and that will not only allow us to get in a better cost structure, but you'll get a little extra money maybe, or maybe equity in our business model as well. That's great leverage for your portfolios.
Absolutely. No, that sounds amazing. Thank you so much. And yeah, we'll be in touch. Maybe we'll have you on again once you launch those new features and if and you're in new markets and all that. So it's been a pleasure.
I really appreciate your time, Francois. Thanks for giving me so much time today, and look forward to connecting with you and your audience further as we go.
Thank you. Take care.
You as well. Thank you.